evening, friends. Actually, I want to put a torch on certain schemes which have been introduced after the unexpected economic disruption has been created out of COVID-19. That's what I want to put a light on those areas. Once this unexpected COVID-19 has been, collapsed the entire economy, SBI has introduced certain schemes based on the RBI guidelines as well as by its own internal structures. First scheme which we have introduced is to help the MSME units. As sir rightly said, MSMEs are the real backbone of Indian economy. They are the major contributor of employment in India, and more than 45% of the exports are being done by MSME units only. And we SBI have introduced one scheme called CECL, Emergency Credit COVID-19 Emergency Credit Line, which is giving around 10% of their fund-based exposure as a WCTL, which is repayable over the period of 2 years with a moratorium of 6 months, which is coming with a very cheaper interest rate of 7.05%. That was the EBLR then. Now it has been 6.65%. Which will help the unit to immediately meet out all their day-to-day operations, such as payment of employee salaries, some important payment of some important supplier payments, all these things. After that, we have introduced certain liberalized schemes, to enhance their working capital requirements, because we have reduced our margin on stocks. As an entrepreneur, you all know that stocks and receivables should be maintained some margin portion. Margin means like the portion from the entrepreneur side. Generally, the margin on stocks will be 25% and margin on receivables will be 40%, which has now it has been reduced. It has been reduced drastically. The margin on stocks have been reduced from 25% to 10%, and the margin on receivables have been reduced from 40% to 15%, which will give an extra room for bankers to lend more. And we SBI have given one more option of switching their unutilized non-fund exposures like LC, letter of credit, bank guarantees. Every unit will have certain NFB exposures. We are giving one-time option of switching their NFB exposure to a fund-based exposure to meet out their immediate liquidity mismatches, which is also very much accepted by the MSME units. And as you all know, RBI has announced the deferment of repayment of working capital, interest obligations of the working capital, as well as term loan repayments, which every bank have passed on to their MSME customer. SBI, actually in RBI circular, they have omitted NBFCs, MFIs and banks out of this particular deferment of repayment. SBI has given one more circular stating that we have passed on the same benefit to all the NBFCs, MFIs. Though RBI circular was not giving the room to pass on the deferment of loan repayment obligation, we have done that one. And next one, what we have done is like generally for the micro and small units who are enjoying the fund-based, working capital exposure of to 5 crores. Generally, we will project their annual turnover. We will project the next year annual turnover, out of which we will give 25%. 25% we will take, out of which 5% will be the margin and 20% we will give. Now we have increased that from 25% to 33% to give additional room. All these measures have been taken to give them extra liquidity at this point of time to come out of the liquidity crunches. Apart from these things, we have given the TLTRO platform to help our NBFCs. Previously, TLTROs have been opened that have been given to all the big corporates. So now we have come out with the TLTRO 2.0, the condition of which is 50% of the TLTRO. The RBI has given 50,000 crores to all the banks. Every bank has to subscribe the same, and that has to be passed on to the NBFCs, some weaker NBFCs. The TLTRO 1, unfortunately, the entire TLTRO 1 has been utilized by the bigger NBFC, so that there are many number of small NBFCs as well as MFIs who could not able to get the benefit out of the TLTROs. Now RBI has specifically mentioned out of the 50,000 crore, 50% of the 50,000 crore, which means 25,000 crores should go to the small sized NBFCs, which is having weaker credit rating. So unfortunately, the take up is not happening as like what it is expected to happen. The final thing is, as sir also discussed about that GECL, which the government has given 3 lakh crore credit guarantee scheme to boost the MSMEs immediate liquidity issues. Out of which I mean the GECL is sanctioned based on the outstanding as on 28th February. So around 20% of the 28th February outstanding has been given as GECL. The government has given around 3 lakh crore, out of which till now, as per the recent data, around 1 lakh crore has been sanctioned, out of which around 75,000 crores, more than 75,000 crores have been dispersed. Around 60% of the dispersed and as well as sanctioned portion has been given by the public sector banks. Still a long way to go. There are whoever are eligible, based on my knowledge, based on the area which I am working, whoever eligible, we have given our full thrive to cover them. Even there are some in many of the cases the customers could not be reached. They were in some places. Even in all those areas also we have done. We have somehow we contacted them, and almost in I am working at a Ambattur Industrial Estate branch where if around 100 customers are eligible, we have covered around 90 customers. I could say that some 10 customers some 10% of the customers are left out because some customers are really don't want to utilize that one, and some we could not able to pass on due to some various other reasons. And one more thing is, like, all these benefits, one good thing about all these benefits announced is it can be extended, as sir said, like it should be human based, it should not be based as a banker slowly we are migrating towards this artificial intelligence, this machine learning, all these things. We are more towards system rather than the personal touch. So all these schemes have been, all the schemes which have been announced can be extended up to a customer who is in trouble. Actually, it can be extended up to the SMA 2 customers, which means the customer who have not paid their obligation till 60 days. Till those kind of till SMA 2 customers can get the benefit out of these schemes, sir.